I was wrong. And as someone that absolutely hates to admit when I'm wrong, it takes a lot to say that, but I was wrong about this one beautiful bill. I really did not think there was any possible way that this was going to get passed and signed into law by the July 4th deadline that the Trump administration put on, but it happened. So here we are, and now you're probably wondering what this means for you. And there's so much noise out there. So I wanted to cut through the noise, actually get into the text of the bill and what it really says. And there is a lot of information that just is not correct floating around. So I'm going to go in, jump into some of the highlights, specifically those things that are impactful to anyone who considers themselves a entrepreneur, self-employed person, small business owner. I'm really going to be focusing on it from that perspective because that is what I do here on this channel. So let's break it down. But before we jump into the good, the bad, and the ugly of this bill, I want to introduce myself to those who don't know me. Hi, I'm Jamie Trull. I am a certified public accountant and a financial educator. And on this channel, I love to bring the information to keep you informed, organized, and profitable in your small business. So of course, if you're not yet subscribed, please make sure to hit that subscribe button. Okay, so first and foremost, let's talk about the fact that this is a bit of a mixed bag. There are a lot of things covered in here. It is not all good. It is not all bad. It is really a mixture. So I wanted to look through some of the big provisions that are going to impact small business and really determine the good, the bad, and the ugly. So let's start out with the good. There are some things in this bill that are going to be helpful for small business, specifically from a tax perspective. So let's jump into what those are. So the number one thing that I was hoping to see in this bill from a small business tax perspective was the qualified business income deduction staying around and hopefully even becoming permanent. And that's exactly what happened. That was part of the 2018 Tax Cuts and Jobs Act, and it is a 20% deduction for small businesses that are pass-through entities. So that's anyone who is self-employed, files a Schedule C, or is a small business, maybe an S-Corp, anyone who's a pass-through entity, not C-Corp. So these are true small businesses that the QBI deduction helps. And it really has a sizable impact for small businesses. So I was really worried that there was going to be a tax cliff, that it was supposed to be expiring at the end of 2025, but thankfully that did stay in this final bill. There was some discussion about what the total percentage was going to be. At one point, they were hoping to move it up from the current 20% to 23%. That didn't end up happening. It is set at 20% for QBI. And they also increased some of the phase outs, and those phase outs are now going to be subject to inflation adjustments in the future. So I think this is great for specifically small businesses that are making under, say, $500,000. This is probably going to save you money, at least compared to what it would have been had QBI rolled off like it was scheduled to at the end of this year. So that is big. That's really going to help you 2026 and going forward, and hopefully reduce your tax bill. So let's keep going with the good. The number two good thing that I see in this bill, and this one actually kind of flew under the radar a little bit, is that you will have fewer 1099s to send. So remember that $600 limit where if you paid any kind of contractor over $600 in the year, you would have to send them a 1099. And again, it depends on how you pay them, and there are some rules around that. And I've got content on this channel that dives into that. However, that threshold is now no longer the $600 that it's been forever, as long as I remember. Now it's gone up to $2,000. So that means that you won't necessarily have to be sending 1099s for every single contractor that you're paying by cash or check. And that is a benefit. That is a good, I think, increase. I think 600 was just a little too low, especially given inflation and all of the things and where we're at. So I think this is actually a good one. It may not be like super overly impactful to too many business owners, but I think it is a good thing to know that the new limit for sending 1099s to your contractors is now $2,000. Now, if you are a contractor, that doesn't mean that you don't have to report those wages. You still need to report all the income you earned, regardless of whether you get a 1099 or not. So this probably won't impact anything from a tax savings perspective for anyone, but I think it is a good change from an administrative perspective. Now, the third good thing for small business owners is really something that's a little bit of an accounting thing. It relates to depreciation. So if you're a small business that has a lot of machinery and equipment, or maybe you're in real estate, there's a lot in here that's actually pretty preferential for you and will allow you to actually expense some of these purchases more up front. So that was something that has been popular in the past. And so that is something that is in this bill. This is one you definitely want to talk to a CPA about and figure out how to use this appropriately. But it does give some flexibility and probably will lead to some tax savings for those businesses that are heavy in assets. And now let's move on to those provisions of this bill that I would consider good-ish. And that includes one that is talked about a ton and there's a lot of misinformation about, and that is no tax on tips. And the reason that I'm using my favorite air quotes when I say no tax is that it isn't quite what it maybe sounds like. Where I do think this will be good in some regards, there are also some limitations that people need to know about, specifically employers. So first and foremost, when we talk about no tax on tips, this is only for industries that are typical tipped industries. So you can't necessarily say, okay, I'm going to start just receiving tips instead of my normal fees. Let's say if you're self-employed, that's not going to work. It has to be an industry that tips are typical. And the other thing that's going to be important here is that it is only for federal income taxes. So this does not get you out of having to pay payroll / self-employment taxes, i.e. Social Security and Medicare. That's still going to be required. So if you are someone who is self-employed, maybe you have a booth and you're a stylist or something like that, and you typically receive tips, the first $25,000 that you make in tips is going to essentially be federal income tax free. However, you still will have that 15.3% self-employment tax that will be something you need to continue to pay. And if you are an employer and you're employing people in these tipped professions, you're still going to need to pay your half of those payroll taxes. So that 7.65% that you currently pay in Social Security and Medicare, unfortunately, you're not going to get out of that. Now, this will help your employees because they will have less taxes to pay. They'll be paying less in income tax, but it doesn't help you as their employer necessarily directly. Now, like I said, the max is $25,000 that you could deduct. You do not need to itemize. This is an above the line deduction in addition to the standard deduction, and it does phase out after certain income limits. So if you make over $150,000 single or over $300,000 if you're married filing jointly, this is going to start to phase out and you're not going to get the full impact. Now, the other thing that I want to point out is this only goes through 2028. And this is also why I say it's good-ish, because this is one thing that is going to go away. And it's only going to be here for years ending 2026, 2027, and 2028. So this starts next year and it'll be in effect for 3 years unless they extend it. And the other thing I've seen some misinformation about is people saying that this only applies to cash tips, meaning actual cash that you're getting. And that's not true. While the IRS language does say it applies to cash tips, they mean anything that is of a monetary value directly. So that could be cash, that could be credit card charges, debit card charges, anything like that is considered cash from an IRS perspective. So that is going to fall under this. It doesn't need to actually be bills that they're handing you. The only thing it doesn't include is going to be things like gifts. If somebody hands you movie tickets, let's say, as your tip, then that's not going to be excludable for this, but I don't know how many people are reporting that anyway. Now, moving on to another thing that I would put in the good-ish category is another one that's been talked about a lot, which is no tax on overtime. As you can guess, this doesn't exclude you from having to pay for payroll taxes as well. So you're still going to have to pay payroll taxes, Social Security, and Medicare. It's just no income taxes on the first $12,500 of overtime you earn. Now, if you are a small business owner who is watching this or a self-employed individual, unfortunately, you don't qualify for overtime anyway, so you won't be able to take advantage of this. However, if you are employing people who are eligible for overtime, this will help reduce their taxes, but unfortunately, it's not really going to do a whole heck of a lot directly from a tax perspective for you as the employer. And this is another one of those things that expires in 3 years. So at the end of 2028, this is going to phase out unless it is extended with other legislation. Now, the next thing I'll quickly touch on for those of you who do charitable contributions, this one's kind of a good and a bad. There are some changes to the charitable contribution rules, and they're going to affect you differently depending on your situation. So one thing that I think is actually a positive is the fact that you will now be able to write off $1,000 if you're single, or up to $2,000 if you're married, of charitable contributions to 501c3s that qualify, even if you take the standard deduction. So typically you're only going to be able to get a benefit for those charitable contributions if you are itemizing your deductions, which not very many people do because the standard deduction is so large now. However, this changes that. So the first $1,000 to $2,000, depending on your filing status, will be deductible. So that's the good. I actually think that's a positive thing. There were some changes that were made during COVID that they did something similar for a lower amount and it worked pretty well. So I think that's a positive for spurring people to give to charitable donations. However, they also added in a provision for those that do itemize. Let's say you give a lot of charitable donations and you rely on that itemization. Now you have to hit 0.5%, half a percentage of your total AGI in order to itemize. So the first 0.5% is not essentially going to count. So depending on how much you make, that could mean the first, couple $1,000s even that you give away to charity wouldn't be deductible, and only the amounts above that. So that was an interesting thing that they added, this floor for itemizers to be able to take advantage of this. However, they did make it easier for those who don't itemize to get some credit for some of their charitable donations. Now, what do I consider the bad when we're talking about this? Well, I think one thing that's been talked about a lot and is fairly true is the fact that certain provisions that affect normal taxpayers are actually only temporary, right? So your typical working person is only going to be really getting temporary benefits versus higher net worth individuals and large corporations that are seeing more permanent benefits. Now, again, QBI is a big one for small business, however, and that one has been made permanent, which is a really good thing. But I do think it's interesting with this bill, the fact that there are these cliffs for certain provisions, but not for others. So when we're talking about the increase in estate tax thresholds, favorable capital gains rules, or some different corporate tax loopholes, those tend to be more permanent versus the things helping the everyday person, which aren't necessarily being made permanent, at least at this time. Now, this video is supposed to be about the good, the bad, and the ugly. And so I do want to bring up just a few things that I do not love in this bill and that may have more of an indirect effect. It may take a little bit of time to see what impact these are really going to have, but they could have significant impact even on small business. And one of those things is the cuts to Medicaid. So they have made changes to Medicaid that are fairly impactful and could mean that certain people lose access to healthcare. And that is a concern. So it's going to be interesting how this plays out in the real world. However, you will be most directly impacted if you are in any kind of healthcare industry. If you are a self-employed, let's say, provider, dentist office, medical provider, anything like that, this could impact you. If you work in a hospital setting or you rely on that, this is going to hit healthcare first. So this is something to really be aware of. There's a lot of ins and outs. If you want to get the bill, I've actually linked it down below so you can read more about what's going on. However, this is one thing that's going to take a little bit longer to see what the whole knock-on effect is, but I do think it's something that we need to be watching and be aware of and could be significantly impactful. And the other thing that I would put in this same category that we just want to be watching to see how this is going to play out over time and how it impacts small business is the increase in budget that is going towards immigration enforcement. And we've already seen a lot of small business owners, no matter who they employ, even when they are employing people fully legally, there are more raids showing up at workplaces, especially if you are in a profession that hires a lot of immigrants. If you're in construction, restaurant work, farming, we're seeing a lot of impact in those communities. And like I said, even if you are, hiring people and doing things fully legally, there's going to be more of a crackdown. You want to make sure you don't accidentally not do the paperwork that you're supposed to do with your verification of their immigration status and things like that. We're going to see more scrutiny on that type of thing. So you want to make sure you have all of your ducks in a row. And I think over the long term, we could see the impact of potentially less labor force, right? So overall, even if you're employing legal people, if we're taking a large portion of the labor force out, then there's going to be more competition for jobs, more labor shortages, and that could impact all of us eventually. And so that's just something to be aware of and to watch. That could also drive wages upwards, which you want to be able to then be planning for when you're doing your business planning. So this is something, again, people are going to have various different ideas of whether this is good, whether this is bad. However, ultimately, I'm talking about specifically for small business. This is something we need to be able to plan for and be watching. So there you have it. That's the good, the bad, and the ugly. Now, of course, this bill is over 800 pages long, so I have not talked about everything. I tried to pick the things that were going to be most impactful in the short term and in the long term that small business owners need to be aware of. However, if you're so inclined and you want to spend some time reading it, I have linked the full bill down below, so make sure to click that and you can actually go in and fact check yourself. I really recommend doing that. There is so much misinformation and memes and things that are flying around the internet on all sides of the aisle, and it's really important to fact check. I cannot stress enough the importance of fact checking before you share something. So thanks for being here. I really appreciate you guys. Again, make sure to like and subscribe if you want more of this content and you want to make sure you don't miss any big updates coming up. Then make sure to hit that subscribe button, and I'll see you soon. Bye for now.